Market madness, March madness, free speech, free markets. What gives? What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd Bubba Horwitz with you on this Sunday, and March Madness is in full swing, and of course, we continue to see, some pretty good games. But as typically plays out, most of the time, the chalks come to the front end of the party, and we saw yesterday, I think almost every favorite won and covered in the field. So we'll see what today looks like, and we'll see where it goes to. But right now, the 4 number 1s are still around, and the 4 number 2s are still around. So let's see what happens from here. In the meantime, we went from last week of having to have a special resolution on anti-Semitism to now free speech in colleges, and they're going to lose billions if they don't come to this free speech. And again, I think this is one of the things that we constantly look at here is why do we need to have resolutions and things on free speech? Is this what we've come to now? We need to cut off college funding to allow to make sure that everybody's got the ability to have free speech and say what they want. And again, I personally witnessed a lot of this nonsense with the lack of free speech during the election. And of course, both my kids were in college, and they were both at liberal colleges or left colleges, I guess, because I think most of them are. And I think it's sad. I think it's a sad state of affairs when we lose the ability to actually to say what's on our mind, and you can't admit that you're not a socialist, you're not a far left person, and I think that ties right into what we're seeing right now with the major apology tour by the left, but not the far left. Okay, and again, I think this is. Again, as Biden said, you said that he thought that Pence was a decent guy. And of course, now he's got to apologize to walk that remark back. Are you kidding me? Is this so we can no longer say what's on our mind? We have to worry about how everybody's going to react to it. So let's go on this apology tour, and let's see how far left we can get so that we can totally destroy everything. Okay, and again, as you know, and if you don't know, I am a center guy. I'm a libertarian guy. But these drastic policies, and I'll give it both sides, but more now to the left as it rockets out. And if you would compare this to a chart, maybe this is the blow off pattern to the left, where they're going to finally wise up, and everybody will get back to somewhere near center and to the best interest of the people, and not to the best interest of the party. Okay, and I think this is one of the things that that I've always complained about is the way that all the politicians, both sides, where they're really just there to scam and take from us, the taxpayer. And I think that is something that is more of a tragedy than anything else. But I think you tie that lack of free speech, and of course we've also now have, and this isn't new, so. You trolls out there that want to, make some ridiculous comment about, what I'm saying here. Just remember that this isn't new, and we know that since the Fed was initiated, okay, in 1913, we have seen the destruction of a free market system. Since we came off the gold standard, we've seen more of a destruction of a free market system. I get it, okay. I don't need to have the cards and letters rolling in saying that what it is. We know what's going on, but we still have somewhat of a free market. But of course, that continues to be pushed away from us and taken from us because of the money. And it's really the politicians, the lobbyists, and all the big money putting everybody in a position that they cannot compete. And I think that's something that we look at even from a regulatory standpoint. When you look at some of the regulations, you go through these compliance issues. And you've got, the agencies, they don't go after the big guys because the big guys tell them to go flip off. They go after the little guys. This is because the little guys will have to either pay the fine or go out of business. So really, what are they doing? It's happening in the banking industry. It's happening in the financial and the securities business. Everywhere you go, they're trying to eliminate small business. They're trying to eliminate competition. Okay, and of course, another crock, or you know what. So that is really what we're seeing. And of course, we now have we have Enron Skilling getting out of jail. Okay, and now he's got a new energy venture. Okay, so it wasn't enough that he scammed them the first time through. Do you think? I will say that this will end up being another one of those big scams. And I think what we'll find out is there'll be a lot of people lining up to go ahead and invest, okay, and take that shot to get rich. You know, and I didn't win the Powerball, but we have a lot of people again going in and getting involved with him once again. And of course, I say to you that, you know, buyer beware. You know, if you want to get involved in that kind of stuff, and again, you can paint the picture as beautiful and as clean as you want. You can make all the promises in the world that you want, okay? But at the end of the day, like any other scam, people buy into them. They flow into scams, no different than they flow into the markets when they're topping out. It's always the same. We're always chasing the greed, okay? And I think, you know, again, we look at all the things that are going on, and of course there's big stories now about Google and how they influenced the midterm elections and maybe all the elections. And again, this is just showing you that the media is more biased on the left, okay? But more importantly than where the media is focused is that the people, we're too lazy to get off our ass and go out and vote. We're too lazy to change things. And if you're not from the part that doesn't like what's going on and you're too lazy to go out and vote, take care of it, there's also the other side of the coin. Well, this is the way we've always done it. And of course, maybe the way we've always done it is chipping away and taking away what we all know as to be what's supposed to be a free market system where we can continue to have competition and we can have growth, and you have the opportunity through capitalism to rise above it and become, you know, Jeff Bezos, if you have you, okay? Here's a guy that put everything in, and again, I'm not that I'm a big fan, but certainly you cannot knock what he has done with Amazon. You cannot knock these guys that have taken something from the garage to, you know, the richest guys in the world. And I think this is what we're seeing trying to be taken away based on, again, regulatory issues, based on the cost of doing business, because again, the small guy pays the same as a big guy, and it's certainly much harder, you know, for a small industry, a small business to compete with the big guys. So again, these are things that we continue to look at, and of course, you then tie in, okay, the beauties from the Federal Reserve. Okay, we've got the great and powerful Oz. Okay, you know, where's the scarecrow? You know, where's the heart, the brains, and the courage to do what's right? Okay, you know, you continue to hear, and of course, everybody who's in the investing community loves the cheap interest rates because it's cheap money. Pour it into the market. Okay, pour it here, eliminate everything else, but yet, you know, also at the same time eliminate a true free market system. You know, the fiat currency was supposed to be totally free floating and free trading against other currencies, and that's how we developed the value of different currencies throughout the globe. And of course, what we see when you went to the fiat currency system, you've taken away the true free market, because now central banks around the globe can manipulate their own currency and make it worth less or more, okay? And of course, that is always the issue, because you've got the race to the bottom, which really is the race of destructing the middle class around the world, okay? And I think when you look at what they're doing here, I think it is absolutely a tragedy that we continue to sit by and say, well, this is the way we've always done it, so it's okay. It's not okay. And I think this is why you'll see the world of cryptos eventually come into the forefront. I actually heard somebody talking on Friday about the government level to have it. Well, again, right now the government's not interested either, but they're trying to figure out a way to get ahead of it. You know, this is always the same story, whether you talk about gambling, marijuana, now cryptocurrencies. Okay, there's no reason why gambling, marijuana, prostitution should not be legal entities that are just taxed, and that's the way that it should be. Okay, but of course the problem is that the government has to figure out how to get their slice of the pie, which they'll never get their correct slice because they don't get it. Okay, they want to, for example, they're talking about taxing traders and taxing you on your transaction fees. They don't get it that you don't make that much money in every trade. Okay, that you can't afford to pay all the tax. You already pay taxes. They want to charge you more. You can't get there. Okay, it mathematically is an impossibility to get to what they want to get to, but they don't get it. Just like in the gambling, now that it's legal based on what the Supreme Court said, you've got gambling in 50 states, but why don't all states have it? Because states want to make more than the bookmaker. They don't want the bookmaker to be in business. They want the bookmakers to be the providers, but they don't want them to make money. Okay, they want to charge them. I mean, if you understand betting at all, okay, and just a quick lesson here. Bookmakers are trying to work on a 5% edge, okay? So they can't pay 10% taxes because their mathematical edge is 5%. You bet 100, one guy bets 100, one guy bets 100 on the other side. They make a bet. The loser loses an additional 10%. So they handle $200, handle 5%. That's what they get because they get 10% of one bet for $10. So they get 5% of $200. Okay, that's the handle. That's what we call the rake or whatever you want to call it. It's called a VIG. But at the end of the day, you can't charge 10% on a company that's only making 5%. It doesn't work. But of course, the greedy city governments, like Illinois and those that they want every drop of blood that you have. Yet they spend it and steal it and do whatever the hell they do with it. And it's sickening to see where we've come to at this particular time. Okay. But again, I think you're starting to see some dramatic changes in markets, and as I've said many times before, I think you'll see at some point, probably not in my lifetime, but you may see another uprising here, another revolution. Okay, because you're starting to see so much overtaxation, and so much so much of what you have goes out. Okay. There's places you're paying 60 and 70% of your income. Does it make sense? And of course, the answer is no, it doesn't make sense. So there is things that are percolating, but again, it has to start from ground zero. And that means that we really need to see more of a free market environment versus what we're coming into now. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break, and we will be back with more of Bubba's Bottom Line after the break. Hey, all. I hope you're enjoying the March Madness tournament. And, of course, yesterday, on Saturday, we did a webinar on our futures, our managed futures portfolios, which you actually manage yourself. We give you the input and tell you what to do. But in the meantime, if you'd like to check that webinar out, all you got to do is shoot me an email at bubba@bubbatrading.com. I'll be more than happy to email it to you. But we've got a great model and a great system, all mechanically, all algorithms, no personal input, strictly by numbers. It's by the math, it's mechanical. So if you'd like to check out, it's a free webinar. All you got to do is email me at bubba@bubbatrading.com, and I'll be happy to send it out to you. Also, don't forget about our high school program. If you'd like to help us out there at Patreon, patreon.com/Bubba Trading, because we want to educate the youth of America, because right now, the way things are going, it ain't getting any better, and I'd like to see it better. Again, for me, it's not going to matter, but I'd like to see it better for my kids, my grandchildren, and everybody from that point forward. In the meantime, let's get back to Bubba's Bottom Line with me, Todd Bubba Horwitz. Welcome back to Bubba's Bottom Line, Todd Bubba Horwitz, and of course, did you notice? Did you feel the change last week? Did you feel anything different? Did the markets feel any different to you? And if they didn't, I think it should. And I'm going to give you a couple of things that you should go back and check, and it'll give you some of the hints and clues. And of course, the week continued to start out, and of course, right now the markets could only go up, but really we're just in consolidation. But you saw a pretty ugly end to the week. After the Fed did their thing, and of course we'll talk about them in our commentary. But of course they had the no inflation, and of course we're going to stay the course, and we're going to continue to kiss the ass of Wall Street, because there's nothing like cheap money, and we don't care about a free market system. We don't care about asset classes pricing themselves. All we care about is that we want to try to keep the dollar lower, and you saw On Wednesday, the markets initially spiked off of that information. Then they broke hard as with the dollar, okay? And then all of a sudden, oh, wait a second, we've changed our mind, and the markets got hammered late. Now they weren't down all that much on Wednesday, but they did get hammered late from big gains. And then up came Thursday, and Thursday the markets went to the moon, like they were again giving away things for free. And of course, perpetuating, and we see they were climbing and climbing. And we're end of the day, we're up gigantic. I don't know, 400 or whatever the number was. Okay, all of a sudden, everything's great, right? We're going to the moon. We're going to go up to the new highs. And then, of course, on Friday, about 3 o'clock in the morning, believe it or not, I was writing up my reports and I was getting ready to send them out. And I just said the markets are fairly flat. Next thing I know, they were down 100, 200, and bang, we were off to the races to the downside. And we ended up closing the week down about 400 on Friday. A lot of ugliness, a lot of things going on. But that wasn't really the issue because basically, if you look at a chart, the markets are just kind of flat, right? They're in that band. And what we just saw was they broke out to new recent highs, came back to basically to support. So what we do tomorrow, again, obviously there's a lot of news out there that could maybe drive the markets one or the other. But from a straight footprints perspective, markets look like they'll probably bounce from right here, and we'll see, okay? People were worried about a Black Monday already. There's a whole bunch of things everybody's worried about. And again, hey, it may very well be the top. I am not, as we have said repeatedly, going on 12 weeks now, we are not sellers yet, okay? I have seen no reason to short this market yet because it doesn't make sense yet, right? At some point it will, but based on the current market footprint, based on what's going on, it doesn't deserve to be sold yet. Now, we will look at a couple of things that should be you should be alert and aware of. Okay, A, end of the week volume picked up Wednesday, Thursday, Friday. Okay, B, volatility picked up. Okay, so volatility, the VIX went from 12 to about 15 or whatever it went to 16. I don't remember the number, but went higher. Okay, now I think there's something interesting to notice here. Okay, so you start more price movement, more volatility, more volume. So all of a sudden now we're starting to see some churning coming on. So now we're getting a little bit of two-way trade in the market. All good stuff. Now, okay, you have to look at it from the standpoint of, okay, what we can do from here? Well, now we're going to make that big move. We've been talking about a big move coming. There is a big move coming. Which way we can't declare. Right now, the algorithms that we're using are still long, okay? They're close, and they could change tomorrow, but right now, they're still long. Right now, based on what we see, they're still going up. But when you tie this in, and here's one of the big divergences, one of the big issues in markets. You've got the bond market going up. You've got gold market going up. You've got the dollar going up. You've got the equities going up. You've got commodities going up. Okay. All of a sudden, again, logically, that doesn't make sense. Typically, all markets don't go up at the same time. Okay. So somebody's going to give out here. And again, my guess is it will be the equities. But again, I can't give you a straight answer today because right now we're staying long. I mean, again, the only thing I can say to you is that I will not change my position until I get a solid footprint and my algorithms say it's time to be short. But right now they've been long, and we're certainly not going to change that now. So now you take a look at some of the individuals. So we've got oil, which has been on very low volume. And of course, we puked out and we're watching this 60 level. Tried to get over 60 again and came off a little bit on Friday. But again, light volume, light trading ranges, not a lot to really get excited about in the oil market. Gold has made a little bit of a higher low. It's now 1,300 to 1,320. And did you notice that spike? We went right to 1,320 and pulled back, okay, and are churning around here. But I think, interestingly enough, the bond markets are breaking out. The yield curve is inverting, okay. I mean, you've got short-term money you've got 6-month money that's more expensive than 10-year money, okay? So again, that is a sign of a potential recession. Now, we're not calling for a recession. I don't think the economy is in all that good a shape myself. I think that there's a lot of good things happening, but I think when you look at the whole bigger picture, there's a lot of problems that we continue to kick the can down the road. One of them, obviously, we talk about almost every week, is the amount of debt that we keep creating. So to me, I say, okay, again, at some point, you're going to see a meltdown, pretty much in the economy. You're going to see a recession. And I just believe that the recession is coming a lot sooner than anybody else believes it's going to come. I am not an economist. I don't play one on TV. But in my opinion, I think a recession is coming a lot sooner than you think it's coming because, again, you have a lot of problems out there with what's called the lack of inflation. You've got a lot of jobs open and a lot of people still not working in capable jobs. We're getting better. Wages are getting better. Things are getting better. But at the end, they're not good enough yet. Okay. So there's a lot of things here that are going on. And of course, the grain markets finally look like they've found bottoms and have rallied and look pretty solid. I think you're going to see, obviously they're not going straight up, but I believe that this year, as we said last year at the end of the year, that I expect to see a potential big market this year in the grain markets. And why do I think that? Because how much more bad news are they going to price in? Okay. There's not much more you can price in. And we have not had an event, a weather event or any event that has created any problems. So, which is why we continue to see the prices which were lower. But remember, they're still higher than they were when this whole trade war and crap started. Okay. So I think there's a good chance you see a potential big market this year in the grain markets. I think there's a lot of good stuff that is happening there. Okay. And based on the patterns that I'm watching. And of course, the meats, as we have said each and every week, that we are buyers of meats on pullbacks. And of course, what did we see? Hogs in the last 3 weeks have gone up 42%. 42% in hogs in the last 3 weeks. Feeder cattle has broken out over the range to the upside, right to our target of 150. Okay, probably will pull back to about 148. And fat cattle or live cattle continues to just keep going up. It gets to a point and breaks new highs, and it continues on one of the most perfect chart patterns you could ever look at for a bull market in cattle. They continue to go higher. So again, I just say to you, hey, follow the footprint and look for right now across the board. You're looking for opportunities to buy. Okay. Now we just switched over in copper. We don't talk a lot about copper, but we've been long copper. We just switched over. Now we're going to be starting to short copper, which is also it's called Dr. Copper. It is one of the leading indicators in markets. So I think that's something to look at. That could lead to some of the other things that we'd be looking to sell. But again, when you have all markets going in one direction, there's going to be some money coming in. And I think the other thing, just one more point on the grains, I know the hedge funds, they're not only the big funds, the commercial funds, but the hedge funds are short grains up the yazoo. Now, again, that typically will create a short covering rally, especially because they've been trying to punish them on light and lousy volume. So something to look at, okay, that you want to know. And at the end of the day, okay, you've got some issues out there. But again, we're not calling anything of a top yet, okay? Right now, we'd be flat just about everything except for grains and livestock, okay? So I think you look at that, and of course, I think you want to watch the hog market. Had a little bit of a blow off. I mean, kind of like the natural gas when the optionsellers.com went bust a couple of months ago. A very similar action in the hog markets. I'd look for some sort of a pullback there, but I'd be using a big pullback for another opportunity to step in these markets and buy. Okay, I think that's something that you want to look for. And of course, the Mueller report's out, and I don't know if we have the details, but I know that WikiLeaks is offering $1 million to get a hold of that report. And I think that I'd like to see what's in there. I think it's interesting, but certainly no more indictments, and who knows? And I think we just had over last week, Citibank fired some Hong Kong traders for some irregular trading. Again, they must have known that there's something coming out on these traders, okay, a problem, because they're firing them now. And again, if you think this is the first time, if you think there isn't a lot of dirty stuff going on behind the scenes at all these big places, then you better think again, because you can bet your ass that there's always something going on. I go back to all the big problems, the whale trader, all these guys. Oh, it's the first time I ever did that. First time, right? I got caught. It was the first time. It's only the issue is when they're going to get caught. Okay. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line. Todd Bubba Horwitz will be right back with my commentary after the break. So if you want to trade futures, okay, futures portfolios, we have got the greatest portfolio management system, okay? A, you get to do it yourself, so you don't have to pay fees. Okay, you just have to pay a subscription fee. B, okay, you can have somebody execute the trades for you if you want. C, we've got a great track record, which you can see. So if you'd like to see that webinar that I did last week, okay, or actually yesterday, you can have it for free. Okay, all you do is email me at bubba@bubbatraining.com. I'll email you the webinar. Check it out. If you got interest, great. If not, hey, no big deal. Okay, love for you to check it out, because again, my goals are always to help people better trade and do things better for themselves. Okay, I'm a coach. I want you to do better for yourself, not for me. In the meantime, don't forget about our high school program. Another thing I like to do, because I'm trying to educate our youth, trying to make our youth of America smarter so that we can make good financial decisions going forward. Again, they're not going to affect me. I'm too old. But for my kids, for my grandchildren, for the legacy, let's make our youth smarter so we can get away from the crap we have right now. In the meantime, you can go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. In the meantime, let's get back to Bubba's Bottom Line with me, Todd Bubba Horwitz. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And, you know, listen to the Fed. And my first words out of my mouth, I did an interview with Market Rally Radio. And the first words out of my mouth were, okay, Federal Reserve, you kissed the ass of Wall Street once again. Okay. And my point is very simple. Okay. There is no reason to have rates at these levels. Okay. Unless that's what the market determines. Okay. That's where the free market comes in. If the market determines the rate should be here, then that's great. But we already know that that's not the case, as we've talked about on numerous occasions, because we know the third-party lenders are getting 5 times, 6 times the current rate, okay? And then they're selling those loans back to the bank, so they're arbing the loan market, and they're getting the money from the bank, and who's going to be on the hook? The banks, which means we're going to be on the hook once again. But the biggest takeaway I took from Chair Powell's speech and from Chair Powell's nonsense was this. We have no inflation. We did not meet our inflation targets once again. Well, I got to ask you, okay? Now, I talk to a lot of farmers, a lot of producers, and I know this, okay? They're selling their products, a lot of them at losses, okay? Because the grains have not gone up anywhere near the cost of what it is to produce those grains, okay? So you can tell me all you want that there is no inflation, because, of course, you understand, right? They have a cockeyed way of looking at inflation. They're talking about inflation on washing machines that you buy every 15 years, refrigerators, TVs, and all the stuff that was expensive that's coming down in price, versus the stuff that you use every single day. Okay, plant and food. You use a grain. You use seed. You use fuel. You use all kinds of things. Okay, that are some price variable. In the meantime, oil's up 20% this year. Okay, so the cost of replanting as we go into planting season is dramatically higher than last year at this time, and yet the prices that they're going to sell for are going to be the same. So you tell me about the profit margin, and you tell me how there's no inflation, okay, when everything that, and I know from my own personal spending, okay, and I'm not a big spender, okay, I'm telling you that everything that I buy is more expensive today than it was last year and the year before. So how do we say that there's no inflation when the input cost of everything that I do, or I need to do, or farmers need to do, or you need to do in your business are higher, yet what you sell your goods and stuff for is lower? So explain to me how the Fed has the stones to say there's no inflation. Oh, they have one of these goofy reports they use. That's how it is, to show that the government may or may not know how to count. Okay. Now, is that not the biggest crock of stuff you ever would hear? Okay. You know, the government reports, did we ever see a government report? One was that was really good or one that was really bad, but the next month they adjusted. But all they're doing is creating the reaction off the street first to see actually how acceptable that report is before they revise it. Okay. It's the silliest thing I've ever seen. In the meantime, there's inflation. Okay. There's wage inflation now, which is a good thing. Okay. But there's price inflation elsewhere. And again, there's nothing wrong with it. Okay. But this goes back to the simple fact, what we open the show with is, if you let the asset classes price themselves and you let the whole free market system work, which we don't, okay, again, I know, so I'll get cards and letters. If we let the free market system work, asset classes will price themselves, interest rates will price themselves, and everything will be a fair and free market, which, of course, between the trade wars and everything else, nobody wants it because there's too many people got their hands on the other side of the deal, stealing it from us. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz. Have a great weekend, everybody. Enjoy the NCAA. We got no picks today. No, nobody we're in love with. A lot of lines are screwy, but we will be back with more picks later in the week. In the meantime, everybody, have a great weekend. Thanks so much. Bubba's Bottom Line. We'll see you tomorrow with Bubba's Daily Update.